Our today's agenda is to cover fixed income securities and option valuations. I intend to make this session, as I said earlier, interactive. And how do we go about this session today? And we have a long journey of about 4.5 hours. So we would start with valuation conundrum demystified, and then we talk about time value of money. Because in my experience, as far as finance is concerned, any topic in finance that you want to make use of in your real life, you will not be able to make use of it in real life unless and until our understanding about the time value of money is crystally clear. Because only when our understanding of time value of money is crystally clear, our understanding about cost of capital will be clear, and only when our understanding about cost of capital is clear, then only we would be able to do valuation. So that is how we wish to go forward. So we talk about the time value of money. Then we would cover fixed income securities. And at the outset, let me tell you, why do we call them as fixed income securities? No rocket science. We call them fixed income securities primarily because these are the instruments that give us fixed income. These are the instruments that give us fixed income, and that is why these fixed income securities are referred as such. These fixed income securities are also referred as bonds. So whenever someone is saying bonds, so basically by default he is referring to fixed income securities. And please remember why bonds are called as bond. Again, no rocket science. Bonds are called as bonds because when the issuer is issuing these fixed income securities, he is kind of signing a bond with the subscriber, and he's signing a contract, and that contract is referred as a bond, which is signed by the subscriber and also by the issuer, where issuer is taking obligation. Obligation of what? Obligation of number one, paying the coupon as and when it becomes due, and also redeeming the instrument as and when the expiry happens. And that's why these fixed income securities are also referred as bonds. So we would be discussing different aspects of fixed income securities. I'm sure, friends, all of you at some time or the other must have thought in the course on business valuation why there is a focus on fixed income securities. Because by general perception, we think that fixed income security is not as big as the equities are. So we would think that putting focus on equities is understood, because size of the equity market globally is of $100 trillion. And for your information, the size of the debt market globally is of $150 trillion. So debt market or the fixed income securities market or the bond market is 1.5 times bigger in size than the equities market. And that is the reason as the valuation professional, we really have to have a very good handle on fixed income securities. And that is the reason why you have this topic about fixed income securities as part of this syllabus. After completing the fixed income securities, we would talk about the options and the option valuation. So friends, this is the agenda that we have for today as far as our session is concerned. Let's start with the first topic, valuation conundrum demystified. So now what I intend to discuss with you, all of you are going to be valuation professional, and please remember, to be a valuation professional is not a matter of honor, it's not a privilege, it's not a prerogative. To be a valuation professional is an obligation. It's an obligation towards the cause of good corporate governance in the whole country. About the good corporate governance in the whole country. And remember, that is the reason and the purpose and the objective of the government of India also behind bringing out the valuation rules 2017. So you will, for preparing for your exam, for passing the exam, you will obviously need to understand what valuation is and things like that. And more you read as to what is valuation, what is value, what is fair value, what is fair market value, what is market value. More sometimes you can get confused because the same thing is defined differently. And therefore, at the outside, let me demystify this conundrum called valuation for you in very simple words. Meaning what? Meaning, number one, what is value? If I ask all of you what is value, 9 of you who are here, or 7 of you, 8 of you who are here, I can tell you all of you will give me a different definition of the value. But the simple definition of value is, what is value? Value is nothing but utility of an object. What is value? Value is nothing but utility of an object that you call as an asset. And what is valuation? Valuation is converting this utility of an asset in terms of money is valuation. So what is value? Value is nothing but utility of an asset. Please remember, an asset will have, anything will have a value only if it has utility. If it does not have a utility, it will not have any value. So that is number one we need to understand. So whenever we are looking at the valuation, first you need to look at the thing that I'm trying to value. Does it really have a utility? If it does not have a utility, you can't value it, because what is value? Valuation. Valuation is nothing but quantifying utility of an asset in terms of money is valuation. The third question that we need to understand is why valuation. So having understood what is value, having understood what is valuation, let us understand why valuation. And please remember, answer of course is very simple. We do valuation because we have to take a decision. We do valuation because we have to take a decision. So, and it's very simple. Unless and until you have to take a decision, you will never have to do valuation, isn't it? अगर आप आपके घर को बेचना चाह रहे हैं, then only you will like to find out as to what is the value of my house. In case if you are not trying to sell it, obviously you will not indulge into exercise of valuing your house because you have no decision to take. So why valuation? Answer of course is very simple. Valuation because we have to take a decision. So what is value? Utility of an asset. What is valuation? Converting this utility in terms of money, or quantification of this utility in terms of money is valuation. Why do we do valuation? We do valuation because we have to take a decision. So only when you have to take a decision, the decision can be anything. Decision can be for IPO, decision can be for offer for sale, decision can be for merger, amalgamation, acquisition, takeover, family settlement, dispute resolution, family assets division, transfer of shares. It can be anything. But whenever you have a decision to take, then you will have to go for valuation. Now what we find through valuation. So जब हम valuation कर रहे हैं, what is that we are trying to find out? Now please remember, all these questions that I'm discussing with you, let them become part of your DNA. And why do I say this? Because if these answers become part of your DNA, friends, believe me, you will realize that your understanding, your comprehension, your decision making, your retention of everything that you read about valuation will become very, very easy. So when we are doing valuation, what are we trying to find out? Whenever you are doing valuation, please remember, doesn't really matter whether you're doing valuation of land and building, or you're doing valuation of plant and machinery, or you're doing valuation of a securities or financial assets. Whenever you are doing valuation, what is that you are trying to find out? You're trying to find out fair value. You're trying to find out fair value. And what is fair value? We all understand it's very simple. I mean, you do not have to every time refer the book to find out as to what is fair value. The fair value, of course, is very simple. Fair value is something which is fair to both the parties. And when I say, and when would a thing would be fair to both the parties? A thing would be fair to both the parties when both the parties are willing, both the parties have a good understanding of the product, both the parties do not have any other consideration other than to exchange that asset, both the parties are doing willingly without any coercion or without any stress of any kind. And that is what is your fair value. So what is value? And I'm purposely repeating this discussion because I would really like that this should become part of your deep understanding. What is value? It is utility of an asset. What is valuation? To convert this utility in terms of money is valuation. Why do we do valuation? We do valuation because we have to take a decision. And what do we try to find out through valuation? We try to find out through valuation as to what is the fair value of that asset or liability that we are trying to value. Now we would discuss about what are the SFAs that require valuation. We would look at them in a little while from now, and we will also look at how to do valuation. So अगर valuation करना है, I am sure all these incomes and approaches and methods you must have already covered, but you must have already covered in your earlier part of training. But quickly we would like to touch upon so as to be on the same page. And finally we come to the last topic of this part, and that is significance of fixed income securities. And I have already mentioned to you significance of fixed income securities. It is the size of the debt market, or size of the bond market, or size of the fixed income securities market is $150 trillion globally, whereas the equity market is of the size of $100 trillion globally. And therefore the debt market or bond market or fixed income securities market is 1.5 times bigger than the equity market. And that is the significance of the fixed income securities. Good understanding of these will completely answer all questions of the conundrum called valuation. And I'm sure all of you must be feeling this as we are discussing these topics. You can feel that your understanding about value, valuation, why do we do valuation, is becoming crystally clear. And please remember, what we have discussed just now is not only applicable to fixed income securities, but it is also applicable equally to all kinds of assets, equally applicable to all kinds of assets. So it is applicable to land and building, it is applicable to plant and machinery, and it is also applicable to any other category of securities or financial assets. Now, what are the SFAs that require valuation? So what are the securities and or financial assets that would require valuation? So broadly, we all understand it very clearly. There are three broad categories of assets that would require valuation for the purpose of decision making in the corporate world or otherwise. And what those assets are? Those assets are: number one, land and building; number two, plant and machinery; and number three, it is securities and financial assets. Under the securities and financial assets, we have broadly 5 more categories of the assets that would need valuation for the purpose of decision making, which fall under the category of securities or financial assets. What these assets are? These assets are: number one, business and equity valuation. Equity valuation meaning doing the valuation of the equity, doing the valuation of share of a company. And business valuation means doing the valuation of the entire business. That's number one. Number two, valuation of intangible assets. Now please remember, contrary to popular myth, most people think that across the globe, the businesses are run on the strength of tangible assets. No doubt, it is true that businesses do run on the strength of tangible assets, but more than that, they run on the strength of intangible assets. Intangible assets. And please remember, the worth of the intangible assets is much more than the worth of the tangible assets which are used by the corporates all over the world for running the businesses. And what is even more interesting, and that is what you must specifically make note of, what is even more interesting is some of the intangible assets which are used by the businesses all over the world may not even be reflecting on the balance sheets of those companies. And why those intangible assets would not be reflecting on the balance sheets of those companies, and that is because of the accounting system that we have. And what is the accounting system that we have? The accounting system that we have is we bring only those assets on the balance sheet for which we have paid money. So if I've created an intangible asset, if I've created a goodwill name, brand name for my company, for my product, for my operations, over the years, because of the practice and usage, remember, I'm not spending any money specifically on building this brand, and therefore in my balance sheet nothing will come on account of brand, on account of goodwill. But the fact is that my business is today running not only on the strength of the plant and machinery and land and building that I have, it is also running on the strength of the name and goodwill that I have created for myself over the years. So under the class of assets of securities and financial assets, we also do the valuation of intangible assets. The third category is valuation of fixed income securities that we are going to cover today. Fourth is valuation of options that again we are going to cover today. And fifth is valuation of other financial assets and liabilities. So these are the 5 broad categories of assets under the SFA that need to be valued. Now before I move forward, let me throw it open to all of you. In case if you have any question or any doubt, I will take that, and only after I take your questions and your doubt, we will move to next topic. Here I would like to mention before I throw it open to all of you for your questions, please remember every asset which has a capability of generating cash flow independently, that asset can be valued based on the discounted cash flow method. So I'm repeating it once again. Any asset that has the capability of generating independent cash flow, this asset can be valued using the discounted cash flow method. So now it's over to all of you.